Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We did have we are in a downtrend. We have our 200 moving averages way down here at the bottom, so it looks like it's sort of heading for that. It says we're in a downtrend, but with the fact that this moving average is starting to curl and start moving its way up, makes me think that the trend may be changing, just possibly. But anyway, we're still in a downtrend. We had more red than green zones from what I was able to see. We had a bounce, we had the arrow, we have a go. This is 20 pips, 27 pips, I believe, was right to the bottom of the top of the green zone. And here are the blue lines. It indicates where the best entry would have been on the alert. That's the alert signal at 178.18. And you can see at 177.98, which are 20 pips, it's just still sitting right above the green zone. I went ahead and took that trade, and right now we'll just see where it is. You can see where my entry was with the green dotted line, and we'll see how it plays out. My stop's way up here above the red zone. If we start seeing this thing, if we start seeing it starting to curl and break above the blue line, especially above this zone right in here, I'll probably be looking at maybe bailing because it's probably going to go up higher and retest this. But right now, we're looking for it to come down, test the green zone where the origin of where this move was from here, the overnight move. Here's our money zone from the overnight session. The British push it up higher. There are some announcements today on the Forex Factory, and I think the British was one of them. This is at 5 o'clock this morning. We had that's mostly just yellow folders, but here at 10 o'clock this morning, we're going to be aware of some U.S. pairs and some at 12:30 later on. There'll be some Canadian pairs, but there is a red folder with the U.S. dollar, so be aware with any pair that is with the U.S. dollar. And we had with a buy on someone was looking about the buy on the British USD. Let's take a look at that. And I'm going to assume it was the buy off of this candle right here.
You're on a 5-minute chart, just to let you know.
Thank you. I need to check all my charts here. We had a bounce, we had the arrow, we had the go. It's in the money zone. British pushed it up. Let's see if there was 20 pip target already on that one. Let's just see where first of all, let's see where the trend is here. It is in an uptrend, definitely in an uptrend. We had the bounce ups. Everything looks good on that part. Let's measure the distance that we had. Now the zone popped up. Apparently the zone popped up after we had the entry. So that would be a good question as far as what to stay in that trade. It went up 14 pips, caused the zone. The question was, should we bail or should we stay? Let's see. Let's see where the entry of that was. This was right around. Entry would have been right on this candle here, so that would have been at 140.82. Let's put some targets and zones in here. $140.82 was the entry. 20 pips. You won. Oops. Target would be 141.02. I believe would be the target. So it came a little bit short of the target, and then the stop would be 140.42. Lots of room for a stop. I say it's still, I mean, I know one of the theories is that if a zone forms on your before you reach your target, I would be. I would say that it'd be worth maybe you have two. I would say you have two. I wouldn't let it go all the way to the stop. I would not do that. I would be looking at this trend line right here. And if it breaks that trend line, I would be looking at getting out. Until then, right now it's bouncing off this arrow moving average. We still have, it hit here, it came back and tried it, came back and hit again. And right now it's still retesting this the wedge in the, it kind of had a little bit of a breakout of this zone. You had lots of hits right up along in here. This is where it broke out. Actually, let me move this up a little bit higher. That's pretty much right there where the entry was on that. So you're right, pretty much right about break even. I would give it a little bit of room. I would say if you got a strong close below this blue line, I'd maybe get out and see if nothing else, if it continues up, you might be able to get a little bit better entry. I would not let it go all the way down to your stop. I would probably not let it get all the way down to the green zone.
Robin in the chat is saying the red zone popped up during the trade, so you should exit the trade if you follow the rules.
Well, and that would be then if you want to follow the rules, that's the rules.
That's the rules.
That's the rules. Me, I would probably hang on to it, but from my own personal trading standpoint, but the safest thing is just exit. Maybe you can get a little bit better entry. In fact, right now, if that popped up, I'm not sure when that popped up. It probably popped up maybe around this. I don't know if it popped up on this whole move down. I'm not sure what the algorithm says, but if it popped up here and you got out down here, you still would have had another shot to get at it. So I'm looking at the wedge. I do see that there is from the heat map that we're looking at. Let's see, where's the heat map? Look at the British USD. The British is still stronger on most of your time frames, so that would still give rise to it's going to be the upside. On the lower time frames, the British did lose some space to the U.S. as the U.S. is getting stronger, but right now it's sort of they're battling for first place. The British and U.S. are right neck and neck on the 1 hour, neck and neck on the 30-minute. The dollar is taking a little bit of strength over the British on the lower time frames, but that could just be reference to the pullbacks that we're looking at. So the rules say to get out of the trade. And if you want to follow the rules explicitly, I'd say get out of the trade. But right now, I'd be maybe looking to see what the price action is on a lower time frame to see if you can find maybe get a better place to exit. But you get this, like I said, we have a nice trend line right here. You're only looking at it's at 140.80 right now. So if you got in at 140.83, you're only down 3 pips. So you may be fighting this for the better part of the day, but I say that's a call that I can't make for you. But I would still hold on to it as long as it doesn't break through this trend line. Right now, you're only down a couple pips. You could just call it. Take your 2 pip hit and then move on so you don't have to think about it. And there's a lot of validity to that as well.
Actually, I've got a couple questions for you.
Okay.
First off, Christine is here. You can let her in the room. But Judson is asking if he can share actual numbers on this call. He's been quite successful following you, so he'd like to.
No, I don't. You can share like entry numbers, or what kind of numbers are we talking about?
I think he's probably talking about profit.
Profit targets. I don't see any reason why you can't talk profit targets. We're not allowed to talk percentage gains and things like that, but no, we're to be able to show where we would be looking at taking profits or where we'd be taking stops. I think that's all part of the technical analysis. I don't see anything wrong with that. If I'm wrong, then maybe Mariska will tell me differently. But
yeah, he's saying, can I share a major gratitude and can I share actual numbers on this call? So I'm not sure if he's talking about entry numbers and take profits. Percentages, he's saying.
The percentages, unfortunately, we're not allowed to do that, but you can take that back into your private groups If you're in a group with a Trade Masters trading group, which is basically it's a private group, anybody in Auvoria Prime can come and join us. That would be considered a private group, and then we can share results and things like that. But we can't do it on these live calls, unfortunately.
Yeah, I mean, you can share it with just the panelists if you want to, but you can't share it, like call wide. Let's put it that way.
Yeah, unfortunately,
So,
I wish we could. It would be nice if we could, but unfortunately we can't. But we do like to see, we'd like to talk to people who have had good results so we can see what they're doing and see how we can maybe help others to do the same type of thing. So your information is valuable to us. Let's just say that.
Yeah. A couple more things. Pepper is asking, what are the 4 time frames on your RCS page? Now, before you answer, I would like everyone just to remind you guys, please put everything in the Q&A because some of the things in chat will get missed. If people chat after you, then it scrolls right up to the top and we won't see whatever it is you're wanting to know. But if you put it in the Q&A section, we will get to it because we'll see them all. So he's asking, what are the 4 time frames on your RCS page? And CB is here as well as Christine.
Okay, we'll get CB in here. The time frames are I've got the 1 hour, the 30-minute, a 15-minute, and a 5. Those are 3 that I use, or 4 that I use. And let's see, where is Charles? We're gonna move Charles over there. We should ask Charles if he wants to be moved over.
Well, he's the one that said that he was here, so I'm assuming he wants to be moved over.
If he told us he was here, then we can. We'll make it. Yeah. That question gives us consent to move him over here. So move him over here.
I think he'd be hiding in the wings if he didn't want me to know he was here.
If so, Charles, if you don't want to come over, don't let us know you're here.
That's right. You just hide in there somewhere.
Okay, we're always happy to have Charles with us. Okay, so let's see. Any other alerts? British Aussie, I think we already talked about that. Right now, that's.
I will remind you, though, you were on a 5-minute chart on the British Aussie.
Oh, thank you. I need to check to make sure all of my chart. I've got.
And
switch time frames. I forget to switch them back. Is what happens.
Mateo's asking about a British Aussie 15-minute buy.
British
and
Aussie.
You were on the 5-minute when you were.
Okay, let me just move this. Move that gold out of the way. And that should be good. British Aussie. British Aussie should be on a 15-minute.
Yeah, you have it on a 5.
I'm on a 5.
Yeah.
That makes a big difference.
Yeah, it does.
Okay. And that may be why mine's not working out as well, because I was on the wrong time frame.
You're on the wrong. Yeah, I put it in the chat, but I guess you haven't had a chance to read it.
Let's see here. Let's move this out of the way.
Okay.
If I can. Come on. We're going to scroll in or zoom out. Don't tell me this thing froze up already.
Good morning, guys.
Morning, Charles. How's your screen doing? Is your screen? Oh, there it goes. It took a little while. Unfortunately, it took a little longer than I would have liked, but it finally came in. We have 1, 2, 3 red zones. We have 1, 2 green zones. It is basically in a downtrend. We do have a strong push down on the 200 moving average, although it looks like it's crossing over, and we had an up arrow. It's not exactly a bounce arrow go, because it's actually bounced, and now we have an up arrow off the bounce off the up the red zone, which that's just going in just a flat wrong direction there. Now, if we had a down arrow, that would have been, at least it would have been a contra trend trade possibly, but right now I would be looking at this as being a retracement. We did say it was in a downtrend, so let me put my arrow in here. Arrow down. There's the zone. This is backwards in so many ways. We're in a downtrend. We had a strong up move. It almost looks like it wants to form an M here. Here's the strong move up. Here's the left leg of the M. Here's the middle of the M coming back up to possibly retest. We had the up arrow. We had a bounce with an up arrow. This is almost like a money market move type of thing. Market maker move. We have a bounce off the 200 moving average. Actually, I kind of like this to the upside, but is there enough room even to try that? $17 pips, marginal, less than the 20, but still tradable. We have a little bit of resistance down here. A long way down for, that's a 52 pip range there. Here's our overnight. Again, this is where the British pound got real strong overnight. One thing I'm looking at with this is we have, here's the day break, and then we have the overnight ranges on the pound. And I said one of the strategies is to put a line right at the top of the bodies, not the wicks, but the bodies of all the highs from the new day, so to speak, before the money zone. The money zone's right here. You can see the shaded area. In the other one, so you put the line above the bodies, right at the lowest body and the highest body. And then you wait and see when the price gets into the money zone where the breakout is. So right, this was actually your overnight move, the break right here off to this candle. This was, even though there's not an arrow there, that would have been the break into the money zone from the overnight low. So that would have been, this would have been the move, the entry here up there. That was really the overnight move for the British pound. Now it came up, it retested the red zone, which comes all the way over to the left. Came back, retested it, pulled back, coming back, retagged the 200 moving average, and we're seeing that these two are very, very close. This one's, the blue one's trying to cross over the purple one, and we have the bounce off the purple. So I like it more to the upside, which is what this candle is. This arrow is too close to the zone. This one is still too close, but it's a lot better. I would say it's not a bad price trade for a long, but I'm not going to be going for too much because I would expect if this is an M, if this is our M formation, which is at the top of a move, then we're going to be looking to go to the downside. And you're looking at this pivot high here. And if the M is what I would call a normal M, you're going to have a high, a little bit of a lower high. It's going to come back up, retest this, make a wedge, and then break to the downside. So that's going to even cut off your target even more. I pretty much, actually, I kind of like this more to the, I think there's some trade possibility there, but I'm just going to pass. It just isn't enough to, there's too many, we're still in a downtrend. We're starting to cross over, looking like it may want to break to the upside. This was a strong move, but I still think it's going to come up here, probably retest the zone, maybe pull back again, and then maybe it's going to have to chisel its way through this red zone over here before it's going to go any further. And you can see where this zone was originated over here 2 days ago. This is actually probably Friday's 19th. Yeah, this was Friday. This zone was originated on Friday. So really it's retesting the Friday high. It is still in a downtrend, but it's now it's just a matter of a test whether or not it's going to retest this area, break through, and then retest that area. And at that point, you'll start, if you can break through this red zone, then you're going to have 3 green zones, probably another green zone, and now you're back into an uptrend. This is, right now it's in a consolidation aspect, or I wouldn't be in a big hurry to get into that one.
Okay, Al?
Yes.
Garvin is saying that on this pair here, the British Aussie, the market maker uptrend cycle about to happen. Just as an observation.
Market maker uptrend cycle. Well, so I also think that they drove the price up. The market makers are coming back in to get their sell orders and then probably drop it back down again. So I'd be looking, I would still be more apt to wait for it to come up, bounce, and see what happens with this. If this blue line doesn't penetrate and cross the 200 moving average, which is the purple line, if it can't cross, then it's going to be probably more of a down move. This is just a pullback to further the down move. But that could be a nice little trade down that way. If this thing can't curl over, and just get a lot of wicks right up in here. You can see where this is pretty wicky. it made some new highs. This is these are little highs that were the wicks. It's making higher wicks, but here's a little wedge right here, and then it broke. If I take this this little mark right here, bring it down.
Okay, we actually had an Aussie yen, it looks like, less than 10 minutes ago.
Aussie yen. Okay. Let's take a look at that. I didn't see that one come in. Where did that one come in from?
At 12, well, it came in
Aussie yen. Yep.
Aussie yen, yeah.
15-minute. Let's take a look at it. Ooh, don't like that at all. I can just tell I already don't like that one.
Oh boy, yeah, no.
Way too tight, way too close.
Yeah.
But while we're here, let's go and reset our chart. So I'm going to bring it over here, template, load the 200 moving average. Make sure that's in there with my fresh Contra trend zones. But yeah, there's not anywhere near enough room in that. Again, if we measure the zone, the green zone to the red zone, we're looking at 12 pips. So it's been in a rather tight range pretty much all morning. So yeah, stay away from that one. Next. Let's see. And what else do we have?
Oh boy.
Anybody else have any pairs they want to take a look at? As in fact, I got in this British Aussie. Let's take a look at that one a little bit closer. Bitcoin dropped a little bit last night. I see. Just retracing a little bit, given another buying opportunity possibly. Forex, British, Aussie, we're looking for.
Garvin's also asking about a British Kiwi, 1 hour for a swing.
Okay.
We can look at that if we have a moment.
There's a British Aussie. I'm just trying to find my British Aussie pair. There we go. British Aussie. Here's my British Aussie. This is my trading view chart. Let's clean it all up first. Let's see if there's any wedges or anything that we want to be paying attention to. Now, I believe we went on a British Aussie. We did a sell on that one. And so right now I'm looking at the higher time frame. Let's just look at the 15-minute. And we're going to see which way it's looking here. And so it did have a nice little, it broke through. Here's the day break. Here's where it drove it up for the night. Now the question is there anything over to the left of the chart that would give us reason to figure out that that it hit the target or a zone that we need to pay attention to? I'll come over here. I'll just put it right here at the body, put a line right here at the body of the candles. Come over to the left and see that you can see where it was rejected right at this point. This was the area that rejected it. So we can be looking at saying, here's a strong move down, base, move down, base, came down, retested this area right in here. So this is the zone we're looking at. That's going to have to get through. It's already been rejected once. So this is the zone we're looking for. This is basically where they found some sellers came in. And we're going to just take this all the way over here. And we're going to call this our supply zone. Take this that way. So we know that there's sellers came in up at that area. Look over here at the bottom and do the same thing at the bottom. And look and see where was price rejected before. And you can see this has been a long time, a lot longer ago. We're all the way back here at February. Let's go to a higher time frame and see if we can find something here. Price is up in this way. So this, oh boy, that's a big move from the low here. This was where the low was. This is a new range that we're in right now. There's our supply. Here's where, this is the origin of this up move. This is, I'm on a 1 hour chart here. This is all the way back. This is back, well, this morning actually. Yesterday and this morning. Looks like there is pressure. It's going to come back and probably retrace at least 50% of this move. So from this morning's low to the high to the retracement, I'm going to move it back 40%. These are my 40% lines. So if it comes back into this area, this would probably be a little bit of our target area that we'd be looking at with this on a 1 hour chart. Let's put it on a 15-minute. This is the overnight low. This is the overnight high. Strong move up. This was how many points was this from here to the top? That was a 100 pip move. Looks like that was, yep, that was a 100 pip move. Pulling back right now, it's at about 40% of that move, and we'll see what it does at this point. We'll keep an eye on our trade with this. Excuse the dog. It decided to. We're dog sitting. And let's see. Yeah, right now there's a nice little pullback. I would like to see probably a little bit more of a 50% pullback. 50% pullback's gonna be right about here into this area. We had a strong move up, basing. Wick came down. This little wick right here is significant, and this breakout of this body is significant. So I'm going to use this zone as a possible target zone for the, we'll call it our demand zone. So I may expect a little bit of a bounce right in here, and that's right at the 178.07 area. So we come over here to 170. Let's see, this is, you want the British Aussie is what we're looking at. We want to take a look at that one. British Aussie, that's up here. So we did see that the one zone we were looking at was right about the 178.07. I'm going to mark that as a potential target. That's really right here, right? And that's right where we pretty much right where we are right now with our moving averages. This is that little wick we were looking at. EuroCAD, let's take a look at that. Right now I'm still in this trade, I believe, on the British Aussie. And I'm still giving it room to work its way down. We'll see what happens. I think it could all come all the way down. I think this is a pretty strong possibility of a move. If I can get this thing to come up.
Mark says it's breaking out. The EuroCAD is.
EuroCAD? Okay, let's take a look at that real quick.
Hey, good morning, everyone.
Good morning,
Hey, Matt. How are you?
Feeling
Morning.
under the weather a little bit.
Are you?
I'm sorry.
Yeah, it's been 3 days.
EuroCAD. Okay, the EuroCAD right now, we're in a tight zone. We're not looking at anything. We have a bounce, we have arrow, but the arrow is going right into the green zone. We need to have, it's got to be able to break through that zone in order to get down to the target. A target would be probably down here someplace. We'll go ahead and we'll reset our chart here. Let's see the template. We'll put the template on. Load the template. Our 200 moving average. Open it. Move my Contra trend lines over. Spread this out a little bit. And we have the arrow. So right here is the entry. So let's set the objects on this one.
Actually, while you're doing that, Al, I have a general question from Stuart.
Okay.
Regarding the money zone Asia breakout strategy. If the price breaks and closes above the zone, goes up, say 5 pips, and then goes back down inside the zone to break above again a few hours later, is this still a valid trade second time around?
I don't know about the second time. I just know that the when it breaks out, and you go for the 20 pips and have your 40 pip stop. If it comes back in, I just say that, I mean, if it comes back in and then the original zone trade was still valid within your stop zone, I say is that you could take it and just get a better entry on it if that's what he's talking about. As long as the trade, until the trade either hits the target or hits the stop. Once you're in the trade, you basically let it hit the stop or let it hit the target for the most part. If it just pulls back 30 pips, it may just give you better entry on it. So let me figure this one out, and then we'll go back. We can maybe take a look at that and see what he's talking about exactly.
Okay.
Open trades. So this would be the Euro CAD. Open trades 153.14, 1.5314. Here's the entry target. This was a sell, 1.5296. There. It's going to have to break through that zone. That's going to have to come down even further yet. And then the stop on this one would be 153.54, 1.54. That's what this one looks like. So basically, we've got to get through this green zone. Once it gets through the green zone, then you have to really look and see from this zone. This would be the target for this down arrow, but we have to get through the zone first. So if we can't get through the zone, once we get through the zone, we've just chewed up most of our target. But then you'd have the next green zone would be the target. And I think you'd probably have enough room to there. If let's say you were able to enter, say in this area, then you have your 20 pips to the downside. So this is a good trade, but like I said, we need to get through this zone right here first. And this is the Euro CAD. And so what's the pair that we're talking about with the money zone thing? Or the overnight?
That was just a general question. It wasn't any one.
Oh, okay. Yeah.
Yeah, it's better if we have the currency pair so we can go back and see it.
But it was just a general question. He stated that it's just general.
Yeah. Okay. So basically, what if, and you may have a better answer than I do for this one, is that with the overnight range of you have your daybreak, and then you have the highest body going across to your money zone, the lowest body going across, and then once the candle breaks, like this candle would have, let's say our money zone would have been, or the high of the candle, this thing here. This is the highest body from the daybreak, and we got to the money zone, and then the candle broke, and we got the arrow. Now the question is, if you entered and it came back, didn't give you 20 pips, comes back into where this line was, is it still a valid trade? I say at that point, it's still a valid trade.
I would enter again.
Yeah, I would probably enter again myself too.
Because if it's going to go where it's supposed to go, then it's just a really good opportunity for a pullback. That looks like a 50% retracement of that original move.
Yeah.
And you're on top of the moving average. It tagged it to the pit. Like that would be, I would be in there without a doubt.
When you start getting these moving averages that are trending up, you can see this is that's a nice little angle up, and it comes in and tests it. As long as this thing is still moving in an upward direction, as opposed to being flat like down here, if it's moving in an upward direction and it tags it, I would just look at that as another entry point. If it breaks it and it starts curling around the other way, this blue line starts curling around the other way, then that's a whole different story. Then you're starting to get a momentum change. But right now, it's just starting to build the momentum. We had a nice little push up, came back down. As Matt said, you probably had a 50% retracement off of that. If you were to take your fib line and start from the last candle that left the zone and just move it up here, you can see that your retracement at this point, it was 62% from this move right here, went up, retraced back 62%, And that's a very tip of 50, 60, 38, 50, 62. Those are not just by happenstance. Those are major pullback levels. The deeper it goes, it's the thing of it like a rubber band. You pull the rubber band back, the further you pull it back, the harder it's going to snap to the upside. And so anyway, yeah, that's but I think to answer your question is yes, there's no reason not to be able to take it the second time if all the parameters, if you have some other, especially if you have some other compelling parameters. And that's one thing we try to talk about in this room, is to give you some other things to be looking at to help those decisions of whether or not to, is this just a quick head fake to the upside to go back further, or is this really the beginning of a nice little push through the, and again, this is the London Open. So what's happening is the British pound was, they brought the British pound down a little bit, and then they broke it to the upside. They got everybody, they were buying, and now they push it up, and now they're starting to sell. And that's pretty much how that works. Yes.
Can we please have a look at the pound Kiwi? Garvin's asked a couple of times now for the 1 hour swing trade, and if we could use the fib retracement to analyze it.
Pound Kiwi. There we go. Pound Kiwi.
Then we have the euro also.
The 1 hour, yeah, for a swing.
For a swing. In this case, so we have fib retracement. We'll see, but first of all, let's find out what our direction is on here. We are in an uptrend. Right there, there's an uptrend. And we have our arrow moving average moved down, crossed over. This was a pullback right here. We're in an uptrend, so it came up. Here's the retracement. Now this is sort of like this is more like a market maker move where they drove it down, bounce, arrow, go to the upside. I like this arrow right here. This is the second one.
I got in that first one last night, Al.
Did you? This one here?
Yep. I ended up taking about 25 pips. It was a swing. I looked at it as a swing because it was out of the money zone, but I ended up jumping out early this morning.
Okay.
It almost hit my 50 pips on that big wick there. Up in the zone. Yeah, that was 46 pips, and we didn't quite get it, so I got out like a couple candles later.
Lucky you had a good broker that didn't screw around with your spread.
Yeah.
I know brokers that would have gapped that spread at 4 pips.
Well, I mean, I would have won it. In other words, I took it long, and it.
I thought you were short, and it came against you. Oh, okay.
Oh, no.
Okay.
I was pretty good the whole way through.
Good.
Yeah, yep. I think it's still good for a swing trade. I don't see. Here was a nice big move. This was Thursday, so Thursday, Friday they drove it down, and well, I think it could take a little while before it could be a few days before it gets back up here. But the fact that it came down, and boy, this looks like this thing could come back down and maybe retest this. Yeah, it's actually, this would be a big wedge, be bigger than. It's actually forming a little bit of I'm looking at more of a channel to the upside here with this one.
Yeah, I think that would be almost too much of a wedge because now you're not even in a correction anymore, right? You're that whole move down. Yeah,
this was sort of like, this was a major move, and now we have, here's the low, here's a higher low.
I like that channel.
Yeah, this channel looks like this could be a nice little channel to the, as it channels. It's probably not good. It's probably not going to go up as fast as it came down. It really usually goes real fast in one direction, and then it takes forever for it to get back. But right now, I like this upward channel. If it breaks this point, if it breaks this lower, right now this is not set yet, because we didn't get a. Like from here, we had a nice bounce up, came back down. It didn't form a higher low from this, and where the red zone and the green zone start to cross. You can almost look at even with this area right here. But I still kind of like where it started here. But I'd like to see this thing bounce off of where it is right now, but it's still in a downward trend. So this blue line could come all the way down further before you actually get that bounce. So really, right now we're waiting to see how far this comes down before it bounces back up to retest up around here, and then that'll give us a better idea of what this channel is going to do. But right now I'm looking at a little bit of this area where it came down. Here was here's an anchor, here's a hit, nice move up out, came back, retested where the arrow is, retested it, came back, bounced again, but now we got this one that broke. So this, I'm looking at right now, this thing could go further to the short side to retest this zone. So if you're in it long, I think it's still ultimately going to be a long, but you're going to have to take some heat in the process. This was a pretty clean break of this from this anchor to the hit. Here's a third hit, and then we had the break. So I would be looking at this more of a retracement. Let's see, where's the British New Zealand? Let's see where we are on the heat map on that one. Let's see where to go. And take a look at the heat map on the British New Zealand on the 1 hour. The British is up here, New Zealand. So New Zealand still, they're kind of neck and neck. So it's at a point of indecision. New Zealand's strong to the British. New Zealand is strong to the British. New Zealand is about the same even on so the higher time frame, the lowest time frame, they're all about the same. It's just this is going to be one you're just going to have to, if you're in a swing trade, you're in it for the longer haul. You're looking at being in it for a couple of days. So you just have to give it the room to breathe on it. It looks like that was a nice, and that wasn't what I would call a real clean bounce arrow go, because here was the bounce. It based quite a bit before it gave you the arrow. But you are starting to get the moving averages to start. Did it get the cross right here on this blue arrow moving average, which is telling me that this thing came down. This is starting to trend back up. If we can get this blue one to start widening out from the purple one, that would be a good sign. Then maybe get a couple more retests before it works its way back up again.
Hey Al, the other thing that I looked at last night with that, where you drew that bottom trend line down there, those big wicks, it looked to me like I played it as a Fibonacci retracement, that if you draw fibs from the beginning of that upward trend, that was like the 79 line down there. Where
use it from this.
Yeah, right there. Nope, down below. Yeah,
using this.
Where those wicks were hitting was hitting my all those right there, right on the fib 79 line there.
Okay, and actually, here's your W. Here's your leg of the first leg of W. Here's the middle of the W. Here's comes back to retest, and now you're going up, and now we're starting to be forming some V's. So this could be just that V pullback that Nathan talks about, where you have the W with a V come up, another V, and then it starts forming the M up here. So this could be that first V pullback off of the initial alert. I think it's still more of a long than it is a short, mainly because we have that nice little W down here.
Actually, Al, we just got an alert on the CAD yen, and it looks like it might be a trade. Did you want to have a look at it?
Yep, let's do that.
Moves.
Let's CAD yen.
Then we have to go back to the Euro Aussie after that, which was 15 minutes prior.
Okay. CAD yen, I want a...
But I trust Ava's call that it may be a trade.
Oh, yeah.
Viable trades come first, guys. Sorry.
Yep.
For sure.
Oh, we want to make money, right?
Yep, we're in an uptrend. We're in an uptrend.
Sheesh, this looks nice.
Yeah, it does look nice.
Huh?
Yeah, I like it.
Uptrend 20 pip. You got your 20 pip target. We have the crossover. It came up, basing, and yeah, I think this is a viable. I think we can take this one.
Let me check one more thing here.
Good. Yeah, let's see what the strength looks like. CAD is stronger to the yen by quite a bit. Yep, we're going to take this one.
Nothing this is significant.
Yeah, nothing in the way on the 5 minute either.
Yeah.
And I got into the trade, and we're going to modify it. We have whoops, too many.
I love it when the wedges that you draw from like a week ago still pans out and still holds value. As you extend those trend lines out, you still continue to get nice bounces.
Yeah, it is nice.
Yeah.
Just remember that we have to add an extra 0. So basically 40 pip stop, add the extra 0 because these are in tenths of a pip, and 200. So I have 400 and 200. Copy it, and then just enter the modification. And let me do it. Head in over here.
Thanks.
Wow, it looks like a nice.
And so we wait. Now we're going to go ahead and since we're already in this trade, now we're going to mark our lines here since we knew what we were doing here. So here's the open. The open on the CAD yen was a buy at 83.53.4. So put 83.53.4. That was the entry. That was the ideal entry. We didn't get this good of a fill because we just that happens. Target. I set my target based on when the alert was. You can maybe move that if you want. So 83.53. So we're going to go 83.73. 373. There's my target. You can see that's pretty close to where my red line is. And then I'm going to have my stop at 83.14.
Pepper saying, Al, you jump in
13.
immediately on this trade, the CAD yen, not waiting for pullback. No, Pepper, not based on the rules for the bag strategies. It's basically how Al just quickly analyzed it, and that's how simple it is.
Yeah, I mean, you could wait till you could put a buy stop in, or a buy limit in for if the price is up a little bit. You could put a buy limit in, and just wait for it. But you run the risk of never getting into the trade. And I'm not gonna fiddle over a pip or two.
Or 5, right?
It doesn't. 5. I mean, it's oftentimes you get it and it pulls back enough to actually get a better entry, and sometimes especially if there's no wick, that means there's probably a pretty strong move to the upside, and
sometimes it just takes off, and if you hesitate, you miss the trade.
Exactly. So usually, if it's within a pip or two, I just do a market order and enter the trade. Especially if it looks like a pretty solid trade. And so right now, here's our British Aussie. This is the one I took earlier today. That one's profitable right now. We talked about that. Actually, that was kind of a mistake because I had it on the 5-minute chart and I was thinking I was on the 15. Be aware of that when you switch back and forth from different time frames. And then I do that a lot when people are asking me about different time frames. I forget to turn them back again. So if you do switch back and forth different time frames, just be aware that when you get these alerts, it's going to be an alert based on the time frame you have your chart set on.
So Stuart's saying that he's got zones 7 pips above entry on the 5-minute for the CAD yen.
Oh, yeah.
Yeah, well, and there's always going to be, and you can do that. But if it's an iffy trade, then I say pay attention to that. But basically, we're trading off the 15-minute. There's really no need to be going to these lower time frames unless there's a question about whether or not to take the trade or not. Then you may want to look at those lower time frames. This one was pretty clear cut as far as the. There was no zone anywhere close by. It had a nice little bounce across over moving averages. There's nothing here right now I mean, there's always going to be maybe some hesitation here at this level here. There's going to be some hesitation, but this was the origin of the move down. This was the first pullback, and then we had a nice little slope down. So I'd be looking at this area right here being more of a trickster area or target area before you get to the zone.
And don't forget, guys, the peekaboo strategy was basically developed because Coach Mo's trading indices, not currency pairs. That's
Exactly.
a different animal altogether.
Yeah.
That's not a Nathan thing when he developed this. Just remember that. I mean, like Al says, it's great for having a double check, but it's not a real reason not to take the trade if everything else looks perfect per strategy.
Yeah.
Yeah, it's a good heads up about something that could happen, but I'm not going to disqualify certain trades when the setup looks good like this by going down to a lower time frame.
Exactly. You could talk yourself out of every trade doing that.
Yeah, well, you could go to the 1 minute and you'll never take a trade.
Exactly.
You'll only take a very specific type of trade, and to me that it just limits myself too much, and it's not a problem if that's what people want to do. Just myself, I'm not going to run down to tiny time frames and try to validate a 15-minute move without any resistance. Good luck finding it on the Forex.
Now, here's one thing you could do if you wanted to be looking at that, and this would be a valid way, is that you have your red zone. This is probably the red zone you're talking about. You have a double red zone here, so there's probably a good chance you're going to get a little bit of bounce here. Well, then rather than looking for an expectation of 20 pips, then you say, I'm just going to go for a 5 or 7 pip target, and then you get out of the trade and you look for the next trade. But if you're looking, so that's a choice to be made. That's a part of your own personal trading tolerance and your trading style. Is do you want to go for maybe rather than having a 40 pip stop, go with a 20 pip stop and a 10 pip target, or a 10 pip stop and a 5 pip target? If you do that, you can increase your lot size because of that. Again, with your position calculator, if you can cut down your stop. So if you say rather than have your stop all the way down here, say you put, okay, I'm going to put my stop here. Well, if you have a 5 pip stop, and this is part of a trading style. Here's where the entry was. Let's say you say, okay, I'm going to put my stop down here. Rather than all the way down here at 40, I'm going to put it at 20. And there's nothing wrong with that. So you said, okay, I have a 20 pip stop. I have a 10 pip target. That's still 2 to 1, double your stop to the target. But now, if you take your position calculator, if I can see if I can put my position calculator up here, and you do your calculation, and you say, okay, I'm on the CAD yen. Let me just scoot this up here a little bit. I'm on the CAD yen, and you find it here, CAD. Where to go?
Have you guys got any updates?
I know we got someplace here.
Have you got any updates on when this will be available to the whole group?
I have not had any updates, but that reminds me to find out if there is anything else. Let's get up here to the CAD yen. So you go to the CAD yen right here, and you say, okay, right now we have a 40 pip stop. Let's say I have a $1,800 account. Let's say, and I want to risk 2%. So you can say, okay, I can take a lot size of a 0.1 lot size. Well, if let's say you can, rather than taking a 40 pip stop, you have a 20 pip stop. Well, now you just doubled your lot size, but now you're also, and if you're going for 20, now if you're going for 10 pips, your gain is going to be the same. Your risk is going to be the same, but you could take a higher lot size. Unless you want to go with this, so you can pull this back down to a 10 pip stop with a 2% risk. Well, now you can take even a larger lot size, but just know that those tighter your stop, the more likely you are to get stopped out before you hit your target. But that's what's nice about this, is it gives you the option. If you want to trade a 15-minute with a 40 pip stop, put a 40 pip stop in, decrease your lot size. Still, you're still doing the same risk. You want to go to a 5-minute chart and say, okay, rather than going for a 20 pip target, I'm going to go for a 10 pip target with a 20 pip stop loss. But your risk in there, this is your profit regulator. Your stop is your profit regulator, because you don't want to be risking more than you want to be. But you also, your profit. Now, if you have a 20 pip stop, and let's say you want to You go for that 10, it keeps on going. You want to stay in the trade. Well, now you could have a 20 pip stop, a larger lot size, and now you're rather than just getting out at 10 pips, you may go for the 20 pips, and now you're going to make even more money. But again, it's a matter that's a way of adjusting your risk level based on your stop.
It's coming, Brendan. This sheet is coming right now. They're trying to sort out how they're going to distribute it and who's going to be that people.
I don't know who's in charge of that detail, but we probably need to find out if they're actually working on it or not, and maybe light a fire.
Follow up with them. Yeah, it shouldn't take an eternity. It's only, but who knows, right? It could be a more complicated process than we're aware of.
Hey, Al.
Yes.
Can we please go back to that Euro Aussie? It came in about 15 minutes ago.
Did we look at that one before?
Yeah.
I'm going to go look at pound Kiwi, see if I can find something.
This
we
looks
were
like
looking at the Euro CAD. We didn't go to the Euro Aussie. So.
Yeah, this is nothing here.
Okay.
Yeah, we were looking at the Euro CAD.
And then, yeah.
Euro CAD is this one. This is the one this is one we're looking at. Yeah, this is one we're talking about with that retracement on the. Let me get this one. I'll clear this one off. Get that retracement thing off of here. Fib line.
And the second part of the Euro Aussie was, what did you consider it for a swing on that? Seeing you didn't have the option of the 15-minute to do 1 hour.
On the Euro Aussie, we're back to Euro Aussie again?
Yes, please. Yeah, you flipped fast. You were fast there.
Yeah, look at Al. It's like turbo.
Trying to accommodate everybody's questions here. Right. So what was the question about? Right now I see this is no trade at all. So what's the issue with this one?
No. Then the question was, the person thought that maybe it was possibly good for a swing, moving it to a 1 hour or possible 4 hour rather than the 15-minute. And that was the question. So I just
I see. Right now it's in a downtrend.
A request.
I don't see this as a swing trade. One is going in the wrong direction. It would have to swing. It would have to be swinging all the way back up to here, and this is a down move. Maybe looking for to get into it as a swing trade. I'd be waiting for it to get up here to. It would be if you try taking it off the bounce off of here as a contra trend trade. You're going against the wave. I'm looking at this to be more of a drop, a basing, and then maybe a further drop. I'd be looking at it more in that line. If I did look at taking it short, if this zone breaks, I'd be looking over to the left to see where the next zone may be. And I think we'd have to go fairly far back in order to find that out. Let's see.
Got a pound US.
Nice. Someone had a mention about pound Kiwi for a long on the H1. So I did the Fibo. It's sitting at 61.8 retracement of the original move, and it looks to be rejecting it. It looks like this could be an interesting swing trade, but I'd want Al to confirm it or just to take a look when he has the opportunity.
So let's take a look at this pound US. That's the one that just came up.
For sure.
Let's take a look at that one.
Sitting in the profit this morning, eh, Al?
Yeah, so far we're looking good. Pound US.
Look at that.
Pound US, and it was a pound US sell. Selling right into a green zone. Let's see what the trend is. I'm going to guess the trend is up.
Strong up, eh?
Strong up. So we'll be looking at wait and see if it gets I don't want to take this. If I did take this, well, here's a couple of things. Let's go and reset our chart to indicate to our reversal zone. Because we're at 8 o'clock, 8 to 10 o'clock, we have that we're able to take contra trend trades. Here's our contra trend zone. We're going to spread this out a little bit. And so if we could get a bounce, This is where the zone was formed right here. We had a bounce, retested it, came back down. Looks like it's coming to retest it again. I would say I'd be more apt to look and see if it broke. I would want to see it tag the 200 moving average. So we can't take it till it breaks the zone. By the time it breaks the zone, it's 13 pips further. Tag this purple. It is in an uptrend. This is in an uptrend. This is just giving up a little bit of a, starting to curl a little bit. But if it can come down, tag this, and then give us, if it comes down, it's going to take this zone out, may form another green zone. I'd be looking at more to the upside. From here, I would not try and take it short unless I had some real compelling reason. I'd have to see a lot of strength to the US dollar, which that is starting to happen as we get closer to the 9 o'clock hour at 8:30. The dollar is getting stronger. I don't know that's getting strong. I'd like to see it penetrate into the zone and give us some price action that may say it's going to break through it. I don't want to see it break through it first. And then you're looking at 13 pips to this one. So there is a possibility of a trade if it can penetrate this zone.
40.55 or something like that.
Yeah,
is that what you're
but
saying?
it's I mean, this is pretty much of a, it's basically trading inside of a zone. Now, if we're looking at, here's the money zone. Here's our daybreak. This is the low for the overnight low. I would say if it can break and close below this wick with some real strong strength to the dollar against the British pound, then I would say this thing might break through the zone and give us a target of whatever this is going to be at that point. This little real bright green area, I think, is a significant area that's going to have to break through because it found some buyers right in here before it drove it back up again.
Yeah.
It drove it up, came back down, based, left it, came back in, retested it. Here's a little trend right in here. Here's your low. Here's your higher low. Here's your trend line.
See, Al, if I may, my observations on this is right now, if you try to sell, you're trying to find the top. But if you're trying to buy, then you can ride the wave up.
Yeah, that'd be right.
You know what I mean? Like this is a lower probability trade because you're trying to find the top of the run, expecting that even if you're looking for 20 pips, that would be a pretty significant retracement into that entire move. Not that it couldn't happen. It's just overall, I don't feel this trade as one of those that I would consider getting into.
This actually looks more like it's setting up a trap, to be honest with you. And I mean, look, when I say the trap is that here's this wick. If it breaks through this trend line, what I'm looking at, I'm looking over here and I'm seeing this was the origin. And I'm seeing where this would be the area where it would be, if it breaks through the trend line, it's going to come back down, retest this was a strong move up, came back down, strong move up, came back down, retested, formed this, and now it's basing in here. But I could see where if it breaks through this break green zone where now it's red, if it can break through that, this could be the trap right in here, or this red zone could be the trap. As it breaks through, people say, oh, it's breaking the trend line, it's coming back down, only for it to trap you as it wants to pull it back up again because you have this thing sitting right down under here.
And that happens often when there's a lot of upward pressure like that.
Yeah.
This is a really strong upward trend. Like if you were to go to the 1 hour chart, you would see that this is kind of a monster move. It had very little retracement ever since the 18th.
And if you actually, looking from a higher trend line standpoint, you have this right here. This was the origin. Strong moves up, came back down, retested it. Here's the hit. So here's your upward trend. Here's your anchor. So pull that back down again. Here's your anchor. Here's the first hit. Here's the second hit right now where we're at. This is the third hit on the trend line. And I can see where oftentimes we'll do, this is where it breaks it, say, oh, it's breaking, it's going to the downside, when really what it's going to do is going to come back up just to retest this area up in here. A lot of wicks up. This is kind of wicky up here. It came up, tested it, came back, tested it, came up, tested it, came back. Let's pull back a little bit deeper and see if we can come back and break through this. This is a nice little move down. If you look at if let's say you draw a stick, I don't know if we can do this or not here. I look at this little trend, this nice little pullback right here. And we take it, move this, if I can move this thing. It's not what I want to do. Now let's see if I can just sort of move this whole thing. There we go. I could see where this thing could potentially come down and retest the length of this move back down, retest the length of this move back down, get another bounce. This would be your trap area right in here. So just be aware of that. You know, the system is so easy, we don't have to make it difficult. That, you know, the old bounce arrow go really works really well in most cases. And just go back to the original thing is that if you're in an uptrend and you get a down arrow, don't take the trade. Wait till it bounces off of this zone, get a bounce arrow, then go to the next one. We don't have to be taking a lot of contra trend. These contra trend zones are basically nice for early in the morning when before the pre-market time, before the U.S. market opens, as we're switching from the strength of the British pound. The Brits are taking control during the London session. The dollar is going to start trading, take control during the U.S. session. And just keep that in mind. And so this point right now is the contra trend zone as the dollar is starting to, as the pre-market, U.S. pre-market is starting to take its positions for the day. It's driving it back down, and it may drive it down further. It may just say, okay, let's just run it back up again. Don't think for 1 minute that the Brits and the U.S. aren't talking to each other. So anyway, right now this is a no trade. Yes.
Pepper is asking, how many trades do you take and monitor at one time?
I'll take. I'm usually 2, maybe 3 trades if I'm. But a lot of times with these arrow trades is that I just take the trades, I put my stop, I put my target in, and I'll keep an eye on it. But I don't really spend a lot of time analyzing it. Once I'm in the trade, I analyze it before I get in the trade, and then once I'm in the trade, then I pretty much let it do its thing. Now, if I see where I'm up, and I see a lot of times too with this, my profit, what I'll do is I'll rather put it on profit in terms of deposit currency. I'll have the profit in terms of points, so I can look now and say, okay, I'm up 5 pips, I'm up 6 pips, and I'll take a look at that sometimes. And if I'm up here at, if my target's 20 pips, I'm seeing at 18, I'll take a look and say, well, it's getting pretty close to my target. Do I want to just pull the trade and say thank you, or do I want to let it go until it takes my target?
Okay, he's also asking on this pair here that you're looking at right now, do you think that the number 1.4100, the whole number overhead, is acting like a ceiling, thereby creating a wedge for 4100?
4100.
So I guess
it's
41
top of the red
here.
zone.
Yeah, it's the top of the red zone here.
Yeah,
It'd be like a wedge breakout, wouldn't it?
Well, obviously, I will say that the whole numbers are usually valid bounce points. There's a lot of other bounce points in between. So, and you can see where oftentimes that there's a certain segment of the trading population that will call fast lead, or they'll fast trade the target zones. And I'm probably guilty of it myself, is that when I see a target zone, rather than waiting for it to come to that target zone, if I start seeing it hesitating, all that's just people coming and taking their profits earlier or trying to get in the trade earlier. And so oftentimes if enough people do that, it never gets to your target. So when I start seeing it bouncing, and I think, okay, I'm within 1 or 2 pips of my target, I just take the trade off and say thank you. And wait for the next trade. And usually if I'm not watching it, I'm more apt to get my target hit if I'm not watching it. If I'm watching it, I'll usually end up pulling it before it actually gets to my target. So that kind of goes along with answering the question: how many trades do I monitor at a time? If I have the EAs that are with the artificial intelligence, I don't monitor them at all. I look and see how much drawdown I may be in, but I don't tweak the settings. I just let the EA do its thing. This I tend to monitor it maybe a little bit more. I think having 3 trades. Generally, I don't have more than 3 trades in a day because I'm usually taking my trades during this session is where I take most of them. And if we get 1 or 2 good trades in a 2-hour session or an hour-and-a-half session, we're doing pretty good. So
yeah, that's a really good day, right? If you get two good trades, I mean that's good. We don't have to go all crazy.
All I need is an average of 1 trade a day, a 2% gain, and I've got my 10% for the week.
And that's big picture thinking, because that's what's that? That's over 40% for the month.
That's 40% for the month. So all you need is 1 good trade a day. That's why I'm not in a big hurry to take iffy trades, because even if I don't get the trade even if I get 3 good trades in the week, that's still 6%.
Yes, sir. And who's making 6% a week consistently?
Yeah.
Right.
I mean, my target is usually 3% for the week. That's my target. Oftentimes I can do better than that, but oftentimes I don't. So, but I figure on the average, if a person can get 3% on the average weekly, some weeks you're going to win, some weeks you're going to win more, some weeks you're going to lose more. But if you can average 3% a week, so I said all I need to do is be looking at taking 1 or 2 good trades a week, and I've got that. So you don't have to be taking iffy trades. A couple of these trades we had today were pretty solid looking trades, so I'm just going to take them and let them run.
So I guess that answers Pepper's next question. Does that mean if you get your 2% a day, you stop for the day? Well, I guess
not necessarily. Not necessarily. Some days they're just good trade after good trade, and so I just let the trade. I don't count how many. I don't try to limit my goals, but I also will say that if I'm up strong for the week and it comes Friday, I'm not very anxious to take more trades just so I can give it all back again. So Tuesday, Wednesday, Thursdays are usually your best trading days for the most part. That's when you can get some of the more solid moves. And if I can get them within those 2 or 3 days, I'm not going to turn down a good trade. Like today, I took 2 trades today. Yesterday, we didn't take any. So it really depends on what you take what the market's willing to give you, and don't overanalyze it. It's either meets your criteria or it doesn't. If it does, now you don't want to be taking so many trades that you're starting to over margin your account. And one thing you want to be looking at, the free margin number here. If that starts getting down to where you're down to near 0, you're getting to the point where you're being over leveraged and you're about ready to blow up your account. But if you have a $5,000 account and you have $5,000, that's free margin. You don't have a whole lot to risk as far as taking more trades. But if you're in a trade and you have a big drawdown, you may want to be thinking about scaling out some of your positions or not taking trades. But this is the number you really want to be watching for your accounts, that free margin number. Because if it starts getting down to, if that starts getting down to like 100 or 200 or 50 or 20 or minus a number, they're about ready to close out your account. So right now I'm not over leveraging at all with these position size. But I can let this thing go 40 pips against me and still not really do any serious damage to the account if I get stopped out. Any other questions? Thank you, Eva, for keeping on top of this chat box.
Oh, no problem.
It's Any other alerts? Any other questions? Let's see, how much time do we have here? We have about another, about 15 more minutes. About another 10 minutes before we'll be wrapping this thing up.
Actually, there was a request in the Q&A. Where did it go now? It was a while ago, though, from Anonymous. GU, GN, and GCAD are all headed down. Do you see trades there without the bag? One of the other strategies. Now, I know we just looked at the GU and we've looked at the GN. Have we looked at the GCAD?
I don't know that we did. GCAD.
And then we have another here for the US yen on the 15 for a long, if we could have a look on it.
Let's refresh my zone here. Let's spread this out a little bit. It looks like we are in a uptrend. And we have a bounce arrow. Here was the arrow to go here. Make sure we're on the right time frame, 15 minute. I'm not seeing anything in sight up here on this chart. Let's go to a higher time frame and see where our targets may be.
I just wanted to let everybody know that we do try to fit all your questions in, but sometimes we can't get to them all in a session, and for that I apologize, but we do try to get to them all.
This one might be easier on TradingView to try and analyze this one. Okay, let me do that. We got British CAD. Let me get that one up.
US yen is kind of interesting. Surprised there hasn't been an arrow yet.
Trying to find my trading view here. British CAD. I think we did talk about this one. Maybe we didn't.
Actually, Anonymous is saying that they're still not clear on how the lot sizes translate into percentages for profit. Matt, did you want to take that one?
Yeah, because your lot size doesn't there's a relationship between your lot size and your position size and your risk in your trade and your account. So based on your stop loss for properly position sizing, that's going to be your indicator of how many lots you can put in the trade. So for example, if you're using for something really, really elementary, so that it's very easy to understand, if I was to say that I wanted to use 1,000 pip stop loss on my trading account, and I've got like a $500 trading account, then if I would have, I couldn't use a 0.1, I'd have to use something like a 0.01. And depending on my take profit on that trade, that's where your money is going to come into play. So the tighter your stop loss, the more, the bigger your, the more lot size you can use in your trade. So the better your entry, and that's where the bag comes into play. If you have like a 10 pip stop loss instead of a 100 pip stop loss, and you position size with 2%, it means that you're making 10 times the amount of money per pip gained as someone that using a 100 pip stop loss, if that makes sense.
That's like a profit regulator, right?
Yeah, absolutely. It's
a profit regulator.
It has a direct correlation for proper position sizing. It's a it's the numerator or denominator of that. It's so foundational, and that's where the tighter stop loss, the better your entry, the more profit you can make in your trade, or the lower risk in your trade. Right? If you're someone that wants to play super conservative, only risk a fraction of your trading account per trade, then you can position size accordingly. Like taking a stop loss shouldn't make you nervous. right? Like hitting a stop loss, it shouldn't hurt you enough where it messes up your head. If it does, then you might be considering that your position, your lot size is maybe a little bit too big.
Yeah, let me see if maybe I can help. Let's talk about this British CAD here real quick, and then we'll readdress that pip calculator.
Yeah, do it up on the calculator, Al.
Yeah, so this British CAD, right now it's coming right up into a supply. This is a daily chart. I had to go all the way over here to March of last year in order to come up to where the level is approaching right now. So it's coming up to like we said, price has memory. And so where it came like last year in March, it's coming up to retest that again. So it does have a little bit of, but once it comes up into this area, all bets are off as far as what it does. Here's the wick. Here's the wick right here. And you see if you look over here on this daily chart, it had a strong move up, strong move down. Came up with that blue candle, strong down with blow, and it retested. There's a little bit of a wick right here. So this is the wick. This was the highest the price came since March. But once it breaks through these wicks, it's got this whole area right here, which is there's no wicks at all, which means this is almost like a free fall that came in, and then it's kind of stopped and hesitated. So once it gets up into this red zone, it could very well go all the way up to where this next wick is on this blue candle, right in here. This is where the sellers took over control, but they had control all the way through here. So when it comes back up, there's probably some sellers in this whole zone that are going to try and push it back down again. And it's going to have to chisel its way up, hit it and hit it, keep until if it's going to break. More than likely, since this is such a long time ago, the longer time ago that you find the zone, the stronger that zone is. So beware if you're trading this pair, beware that you may start looking at a reversal coming up into this area. Now, so that's about the best I can say about this British pound. If we go back to our pip calculator, we'll do this one more time, and then we're going to have to go for the day here. Here again, here's your pip calculator. So say you have a $1,000 account. I should make this math simple here. And you want to make sure that you don't risk more than whatever percent you're comfortable with. Now, if let's say I wanted to take a 40 pips, let's say I wanted to trade this lot size of a 0.10 lot size, and I wanted to trade it with a 100 pip stop. If I did that, I would my risk level would be probably 20%, or maybe 10% risk. You'd actually be risking 10% of your account in order to be willing to get a stop. If you take a trade, you have to be willing to accept the stop. Your stop has to be in an area where you figure it's not going to be hit. But if it does get hit, you want to make sure that you can accept that hit. And so, but if you're looking at $1,000 account and you want a 100 pip stop, you're risking 10% of your account. You're going to risk $100 with this lot size. But let's get back to what we're saying is that now you want to be risking, 2% is a pretty comfortable risk level. Well, now you're still, for the same 100 pip stop, your risk is still $20, which is still $20 is still 2% of your $1,000. But in order to get stopped out with a 100 pip stop, your lot size has to be 0.02. But now if you say, well, I don't want a 100 pip stop, I can do it with a 20 pip stop. Now we keep this number in mind, 0.02, not point something, just 0.02. So now when it goes to, I want a 10 pip stop. So now rather than be a 0.02, now my lot size can be 10 times that. Now I can do a 0.2 lot with a 10 pip stop, same risk level, still risking the same dollar amount, still risking the same dollar amount for the account, but the lot size changes based on what your stop is. And I don't know if I can make it any clearer than that.
I think that's pretty.
I think that's as good as we can answer the question. I think two
Yeah.
a little bit different interpretations.
So that's why we say this is your profit regulator. In other words, like you can take a larger lot size for now in order to get a $20 profit, you're going to have a 20 pip target. Now, what we're doing is we're talking a 40 pip stop with a 20 pip target. Well, the stops would say the same. The stop is, you're still risking $20, but your profit is only going to be 20 pips, which is going to be half of that, which means your profit is really going to be 1%. So your profit, so if you have a 40 pip stop, a 20 pip target, which is half of what your stop is, your profit's going to be half of what your risk is to the profit side, which is going to be $10. So, but if you want to have like a 1-to-1 ratio, you can risk 40 pips for 40 pips. Well, you can risk 40 pips. And if you go for a 40 pip target, you'll get a $20 profit if you hit your target.
So pretty much you have to figure out what you're willing to risk. In this case, if you're willing to risk the $20 on your $1,000 account, then you put in your pip stop according to what you're comfortable with. Say you're comfortable with 10. Like if it goes 10 pips against you, then you want out. Al, if you could just oblige me and put the 10 pips in your standard risk part.
Okay.
Then you can do a position size of 0.21. And if it goes back against you by 10 pips, you will still only lose 20. But if it doesn't go against you, the 10 pips, then you can see how the increased lot size is going to be more profitable if it goes to, say, your 5 pips to the good, to where you want it to go, or 10 pips to where you want it to go, based on where your take profit is.
But if you want to do a 1-to-1 risk reward ratio, if you want to do 10 pip stop, 10 pip target, your profit will be $20 with the same from the profit side. But if your target is 20 pips or half of what your stop is, then your profit is going to be half that. This is what your risk is. But if you have a 1-to-1 risk reward ratio, then your profit is going to be the same as what your risk is, but to the profit size. That would be a green $20 rather than a red $20.
It took me a long time to get my head wrapped around this thing, guys. So hoping that this has explained it for you a little better. We got like 1 minute left, Al.
Yeah. Okay.
Yeah, that's a good point.
So with that, any other questions real quick before we go? I think we've
got a few that we can't get to.
We really can't get to. So
yeah, we got like 7 of them. Sorry, guys, in the Q&A, we got to get going. We can't answer them.
Yeah. So anyway, there is another room opening up here at 9 o'clock. I'm not sure who's running that today, but they're going to go from 9 o'clock till noon. And we will see you later. Thanks for coming in, everybody. Thank you for the questions.
Thanks, guys.
Good session.
See you guys on the dark side.
Yeah, watch your trades. Keep an eye on those trades and make sure don't let them get away from you. And on that note, thanks everybody, and we'll see everybody tomorrow.
Have a great day. God bless. See you tomorrow.
Later.